Hello, it's Friday the 14th. I'm FxPlew and this is the market brief. So the UK economy stagnated in February. Zero growth in February means we've had just 0.1% growth year to date. And that's a bit disappointing after 0.4% of growth in January. And Jeremy Hunt has been accused of being overly optimistic after he said the economy was faring better than expected. Of course, government sources are quick to reject Brexit as a reason for the stagnation, and some commentators are putting this down to the strike action over pay. Because it couldn't possibly be Brexit, no chance of that. We're much better off now we've got our borders back. We wanted all the staff shortages when those nasty European immigrants went home. Slow economic growth? It's got to be down to all those greedy healthcare workers. Those nurses and junior doctors would be propping up the economy if they hadn't been striking for a better hourly rate than you get in Starbucks. There's your problem, right? So whoever thought we should be looking to the US for a dose of sanity? But the Fed minutes suggest a shift in attitude away from their laser focus on inflation. This will likely be compounded by the March inflation report. That showed a solid drop in core inflation, down a full 1% to 5% now. And as you'd expect from a big drop like this, it has rather stirred up the chatter from those fearing a recession, and there are renewed calls for the Fed not to raise rates again. It's certainly a positive development in their fight against inflation, and we shouldn't forget Powell's commitment to data-driven decisions. So we may very well see them delay another rate hike, if nothing else than just to see if the drop in inflation continues over the next month or so. Meanwhile, in the market, the dollar has struggled from all this positivity around falling inflation. If rates are at or indeed close to the top of the cycle, then future yield is capped here and demand for dollars will drop accordingly. And this is helping support sterling. We topped out around 125.40 against the dollar yesterday. That's as the dollar index fell to 101.45. And unless there is a shift in market sentiment, the chartists tell me that a test of the 100 level now looks likely. We kick off this morning from 125.40 against the dollar, about 113.30 against the euro, and euro dollar is around 110.65 on the open. Right, that's it from me. Have a great day.
If you do not have a clue, then just tweet through and ask FxPlew.